you the ag information you need. This is Market Talk, produced by the American Ag Radio Network. Now, here's your host, Jesse Allen.
And welcome into Market Talk on this Friday afternoon, live from Commodity Classic in New Orleans. Thanks so much for joining us and making us part of your day once again as we wrap up another volatile week in the ag markets. And I'm your host, Jesse Allen. Again, thanks for joining us. Find us online, markettalkag.com. That's your one-stop shop. All of our social media links are there, all of our streaming sources, etc. All the latest news of agriculture, much more. It's all online, markettalkag.com. Well, pleased to have joining me here in person today.
Yeah.
Hey, Ted Seifried, Zaner Ag Hedge. Ted, how are you, man?
I'm doing great. It's Friday. We're in New Orleans. It's a good time to be alive, man.
It is. It's going to be a good time on Bourbon Street, I think, later on tonight as well for some of
You know it. You know it.
And maybe a good time on Bourbon Street for some of the farmers, many farmers who are down here.
Oh, yeah.
Just looking at commodity prices and the volatility we've seen, it's wild times, and I know it frustrates some people, so maybe some people want to blow off some steam tonight here on Bourbon Street. But talk about just the way you saw the trade here today. I know it was wild. Wheat was down, then rallied.
Yep.
So much volatility in these markets remains. What do you make of what you saw today?
Today was a bit of a breather compared to what we had been seeing all week. Things kind of settled down. And honestly, going into the weekend, nobody knows what this news cycle is going to bring us when we come back. So I think you've got, we used a lot of energy throughout the week. And then when we get into Friday, before weekend, before whatever the news is going to be, I think we just wanted to kind of, trim it back just a little bit. But yeah, I mean, the big one is the wheat, obviously, the whole week, right? Mm-hmm. What was it? Wednesday, wheat traversed a $1.99.5 range, and it did it twice. In fact, it did it one of those times in, 10 minutes and 37 seconds?
Something like that, yeah. Just insane volatility.
That 1 day's range was a bigger range than you had from, 2014 to 2019? And you did it twice in 1 day. And these are historic times, Jesse. This is unprecedented. We don't really know what to do with it. From the sense that, commercials have a big problem right now. Obviously, they just got caught in a short squeeze, which cost them a whole lot of money. But then, what happens when you want to go to your grain elevator and put an HTA on? Well, your grain elevator is very afraid of doing that because of what just happened. So are they even making a market for you is the question. Mm-hmm. And the volatility that you're seeing in wheat right now is really presenting a major problem in the industry as a whole. And I think you're going to continue to hear follow-up from the last 2 weeks for some time now. So it's crazy to watch, exciting if you're not terribly involved, and especially if you're not caught on the wrong side of it. But it's profound, and it's going to have some negative effects too. So, that's the thing that we have to kind of keep in mind. The other thing is, look what the USDA did with wheat midweek. They lowered exports rather than increased exports. And the reason that we sparked this whole rally off was because, with Russia invading the Ukraine, we figured, we might get more business, and our wheat carryover might be much tighter. Mm-hmm. Well, the USDA just kind of said no to that. Not saying that they won't change over time, but we need to see the export sales happening before they're able to change. Mm-hmm. At least that's the message that they very clearly sent on Wednesday. And then we follow that up with Thursday export sales, another disappointing week in wheat, even after the news has broken. So it makes you really wonder if a lot of that price was justified. What we had there was a short squeeze. Your commercials were very short. They needed to get out. They couldn't do that locked limit up. The only way they could do that was spreading out against the December contract. And as they did that, you could see this massive move in that May, December, and even the July-December spreads. Mm-hmm. Once that spread started to calm down, you knew that short squeeze was coming to an end as these guys had found ways to get out of those short positions. And then you knew that wheat was going to break off the highs because we had a lot of thin air underneath us. And then we did, right? But on Friday, we started to stabilize. I think now that we are well off our highs, we found a value range for what we know as of right now. I don't know if we need to go back and take those highs out. What that will depend on is if we do in fact start seeing these export sales, and we start trimming our domestic carryover. We also have weather reasons to be bullish wheat too, but again, we're already at some very high prices right now.
Very true. I want to stay on the topic of some of those short squeezes and the commercials a little bit, because I found it very interesting. We've seen this happen, and not even just wheat, but we saw some of it in corn and soybeans with the volatility there. And I know a lot of farmers, a lot of chatter on Twitter about it and going, why is this happening? And it was a very rare thing to see happen with all the volatility and seeing a lot of these cash bids being based off, July, September, December, etc., November contracts. Like, talk about that, what you saw with that, and as a farmer, I mean, how do you market in an environment like that? Right.
I spent a lot of time this week talking to guys individually, but also, television and radio, trying to help people understand what happened in the wheat the last 2 weeks. Because it's not, if you look at the cash prices of wheat, that's not what did that. This was a futures market, and it was a short squeeze. And it's these sorts of things can happen in extenuating circumstances, which is what we have in wheat. And it becomes irrational because you have a large position. In this case, it was really the commercials and the funds that were really short, and then the news breaks that is surprise. It's scary. It's bullish. Your limit up. They can't get out. So then it's you've got. Let's say this. You got 1,000 people trying to get through a very small door that one person can go through at a time. And so when you create that panic that, someone yells fire and everybody runs for the door, well, then that's what happens. And so that was a function of the markets, not necessarily a function of the wheat fundamentals. So, and again, understanding how that works, and then understanding how that spread is being utilized for them to get out of that short position. It was kind of easy, not easy, but I was able to, within a day, kind of call the top in the wheat because of how that spread was trading. Sure. If you know these things, then that makes things a lot easier. If you don't know these things and you're just watching wheat limit up every day going, what is going on? Is wheat just going to $1 million? How's this going to end? Well, I mean, it's a difficult. Fortunately, we don't have these things happen all the time, but when they do, it's a learning experience for everyone.
Very true. I know you mentioned this. We had the WASDE numbers earlier this week, and as well on the soybean side, Conab came out. They cut their production again on Thursday. We've got more private estimates. We're getting some sub 120s out there now. Yeah. You look at the bean market on Friday, though. We were down moderately. Bean meal was down. Oil was higher, but just looking at that South American weather issue. What are your thoughts with that, where that's at right now, and what we're looking at with this market trade?
Well, soybeans are the story. They've been the story for some time now, but that story kind of fell in the backdrop with everything that's happened with wheat and Russia and the Ukraine. That soybean story has not gone away. But, I think it was healthy for the market to take a little bit of a breather, to trade a little bit sideways, although we were up on the week, even though we were down a little bit on Friday. We weren't up a whole lot. But we've kind of fixed the overbought situation in the soybeans. The USDA did lower carryover. They did increase exports. So that confirmation of that, that allows the market to take a bit of a breath right now and say, okay, well, at least our carryover's not, sub 200. But then you see the export sales that we saw on Thursday, and you see the new crop sales that are happening pretty much every day. And that soybean story is not over with. I think there's a very likely possibility that we're going to continue to see exports surprise us and the USDA. I think that carryover number is ultimately going to come down, maybe closer to 180 million bushel or so, a number that we can't really sustain. I mean, we're potentially going to run out of soybeans. That is the reality that we have. We can only go a few more weeks of these export sales like this before we really do have to worry that we're going to be out of soybeans. And we're already at 92% of the USDA's now revised export number. So the question really is, where do we price ration soybeans? What do we do to slow demand down? Because $17.50 soybeans is not slowing demand down. If anything, demand has accelerated. So how do you slow down the crush? How do you slow down the exports for other countries like China that want to crush? Because crush margins are really, really good for both of us, for China, for everyone. And a big part of that is because of the strength in soybean oil. Soybean oil is having that sort of renaissance like corn did with ethanol back in the 2000s. So it really makes you wonder, how high of a price do we need to go in an inflationary climate with good crush margins to really ration that demand? And I don't know. I really get the feeling that's maybe quite a ways from where we're at right now. You cannot count on that as your marketing plan. You have good prices, you need to be selling them, but re-ownership strategies, I think if there was ever a time to do something like that, now is the time, because we are going to have an explosive setup for at least the first half of our growing season. That could take us to some unprecedented prices if that powder keg gets sparked. Whether that happens or not, I can't say for sure, but the setup is there for some wild times for this. I'd say into early summer. Things can change dramatically by the time we get to harvest, but at least for the next couple months, things can be really interesting, let's say.
Very true. Now, I haven't heard this much on soybeans here at Commodity Classic, but I will say, as we segue to corn, I've heard from a few different farmers saying that they still have some old crop corn in the bin. I know that's not everyone, but I was actually very surprised to hear that from multiple people. And I could count a couple hands at least here, people I've heard that from. As you look at this corn market, a lot of the same storylines as soybeans. We're watching weather, obviously dryness in the western corn belt here as we get to spring. So I mean, I know there's a lot of worries about the corn market as well, but also not just new crop, but some of these folks who have some old crop sitting around. I mean, they're kind of just gambling at this point, basically.
Well, and that's what we call that, Jesse. You know, whatever old crop corn, and I always like to tell guys to do this. So I'm not saying that's a bad thing, but we like to have some gambling bushels when we're getting into a growing season in case something does happen. And we usually feel pretty safe about having those gambling bushels until we get to about mid-June, because that's a lot of time. Mid-June into early July is a lot of times when we put our seasonal highs in, and then we make our procession lower into harvest lows. I like taking some old crop into, and if I don't have the bushels in the bin or in storage, then I have them in the form of call options. You want to have upside exposure to this market in this climate one way or another, and that's certainly one way of doing it.
Yeah, very, very true. As far as the corn market, you look at prices there. I mean, I know we've talked before, and you mentioned this just now about the soybean market being a powder keg there. What do you think about the corn market, though, as we move into spring?
Yeah, so the corn market, everybody's kind of been, wow, the soybeans are the story, and then it was the wheat's the story, and corn's kind of bullish, but, at a 1.5 and now a 1.44 billion bushel carryover, we don't have this bullish enthusiasm in corn quite as much as soybeans. Now, certainly we're at some pretty good prices in corn. We have had a bull market for quite some time, but it's just not the story that gets talked about. And part of the reason for that, Jesse, is because the USDA, CONAB, the market as a whole, global end users, everybody is just taking for granted that 86 million metric tons of that second season Brazilian corn crop is just going to be there. Well, what if it's not? So that's the potential for the corn market to have an explosive upside, because look at last year's Brazilian safrinha corn crop. They were expecting 84 million metric tons. They ended up at 60 million metric tons because of a La Nina year. Well, guess what? It's another La Nina year. It's called the La Nina double dipper. Also, with input costs being as high as they are, did they really get aggressive on acreage? Did they really get aggressive on putting down fertilizer? I'm hearing they're still having a very hard time getting nitrogen coming into the country. And now with Russia banning their exports of fertilizers, I don't think they're going to get it. So what if the corn crop isn't 86 or 84 or even 80 million metric tons? What if it's more like 78 to 74 million metric tons? If that's the case, and we get an extra 10 million metric tons of exports, that takes our carryover down to or possibly below a billion bushel. And now we have a situation where we have to price ration corn. Nobody's thinking that at the moment, but I think there's a very real possibility that could be the case. And then on top of all that, as you mentioned, we have a drought in the Southwest. That is where growing season droughts start. A lot of times that'll happen and they'll migrate north and east. So that's a potential too. There's a major powder keg in corn that nobody's talking about right now. Not a whole lot of people are talking about right now. And if that one gets sparked, then oh boy, you're just going to have a scenario, a climate where you've got, wheat already doing crazy things. Beans have had a very bullish story for a long time, but we are not price rationing soybeans at $17.50, and who knows where we'll have to go to do that. And then if you get corn involved in that scenario too, oh boy, like I said, could be a very interesting next few months.
And I have said this a couple times now, and I'm say it again. You watch the drought, and you mentioned how it migrates north and east.
Yep.
That drought monitor, Iowa, is very dry right now.
It's getting yellow.
And I'm worried about Iowa. Now, I know the old adage, plant in the dust, the bins will bust, and we'll get some rain and long-range weather models. Who knows? But I'm worried about the heartland right now, the Corn Belt, Iowa, Illinois.
Nebraska.
What happens there, Nebraska. I'm worried about that.
Yep.
Talking here, crude oil as well. We should touch on that market. Again, higher today. We have cooled, though, from recent highs. So, I mean, did we get past the initial shock to the market, so to speak, or at least some of the fear trading that we saw in the crude oil market, Ted?
Crude has been almost as bonkers as wheat. And it was very much tied into the Russia-Ukraine scenario.
Yes.
Something that a term that I've been using, we talk about risk on and risk off trade. If you're following markets and guys like me and you that talk, people have heard risk on and risk off and things like that. Well, I'm calling this conflict on and conflict off, right? And what you had midweek is you had a hint of an idea that Russia might pull back if the Ukraine promises to be neutral and is willing to let Russia have the areas that are controlled by the Russian separatists. I don't think that's going to happen. I don't think Russia's leaving anytime soon. I think they want the world to believe that they're playing nice when they really aren't. But that caused a $16 downdraft in crude oil. Now, we were able to kind of stabilize there on Thursday and then obviously higher on Friday. I still think the crude story is there. The inflation is there. There's an global energy problem that we have right now. I don't see why crude wouldn't go and make new highs. But when you have, again, this inflationary climate, all this global unrest and conflict on, conflict off, you're going to have these massive volatile swings here and there. And honestly, for guys that are trading this thing, well, hey, you look for stuff like that as buying opportunities. You kind of need that sort of thing. In bull markets, they don't make entry and exit easy, right? Bull markets are designed to scare you. Bull markets are designed to not get down to your buy point that you want, get close to it, tease you with it, and then run away from you. These are how bull markets trade. You see it in the soybeans. You can say the same for corn. And certainly say that for crude oil.
Now, Ted, before we run out of time, we haven't touched livestock yet. We should touch on it a little bit. Good solid day in cattle. Great move today in the hog market.
Go hogs go, yeah.
What do you think about these markets as we wrap up this week? We've seen some up and down volatility, especially that hog market. We pulled back, and now maybe are we making a run higher? What do you make about what we're seeing with demand? I know we saw a good WASDE report for both beef and pork this week.
Yeah, right. Exports were okay.
Were good. Okay too, yeah.
Box beef prices have come down pretty aggressively. In this climate, packers are really worried about, stock market volatility, domestic demand, so on and so forth. So when that box beef price comes down in a scenario like this, it really makes them scared of really bucking up and paying higher cash. But I think now that we've had this break, that's gone on for almost a month now, I think we've gotten into levels where we should find some very solid support. I think first of all, box beef prices are going to start to rebound as we get into spring and summer, our traditional grilling season. I think our domestic demand is going to be even better than what we're currently expecting. I think we're going to be hot and heavy on grilling season, on eating beef. So I see upside potential there for cattle. And again, at some point, even with higher corn prices, cattle have to go too. Otherwise, we're just not going to be feeding any animals, and we just don't have beef. That's not going to be allowed. This is America. We want beef, right? So, I think we may have just defined a low in cattle. I'm optimistic there's upside, but we're going to need to see cash trade higher. And to get the cash to trade higher, we need a pretty sizable rebound in the box beef market. But I'm optimistic that these things will happen over the course of the next month or two. As far as the hogs are concerned, wow, what a good way to end the week there on Friday. You have a similar situation in the hogs where you had a rally, then you broke off the highs, and again, part of that is concern about domestic demand and everything like that. But cutout values were sharply higher there Friday morning. Cash index was higher. You really get the feeling that cash prices, both in the cutout and the index value, have maybe just put in a low. And so now you got a futures market that has, we tested a low, bounced off it, went back and tested it again, bounced off it again. It's just kind of saying it's done going down for now, I think. And whether we go and make new highs, I'm not so sure, but I do think we'll bounce back up towards those highs and possibly trade sideways here for a little while we see what happens with, conflict on, conflict off, stock market uncertainty, what our domestic demand is going to be going into grilling season. But again, I think all of those things, ultimately, the domestic demand, I really think is going to be there, and I can justify making new highs in hogs at some point.
Definitely. Well, Ted, it's great to catch up with you in person, and I know if guys need some advice, you and the Zaner Ag Hedge team can help them out. What's the easiest way to get hold of you guys? Yeah,
you can find us on the web at www.zaner.com. You can sign up for our newsletter, read a bit about us. You can also just call me, reach me directly at 312-277-0113. Other than that, you can find me on Twitter. I'm at the Ted Spread. I like to talk about cars, ethanol, E85, hot dogs, whether they're sandwiches or not, which they are, by the way. And yeah, I like to have a little bit more fun on Twitter. Show my personal side a little bit more, but I do some market stuff on there too.
I haven't seen the corn hat this week.
No. The corn hat does not travel well.
I thought you were going to bring it.
I really wanted to, but when I was packing the suitcase, it came down to, am I going to bring my socks and underwear, or am I going to bring the corn hat? I chose socks and underwear for this trip, anyways.
That was probably a smart decision.
Well,
either way, I know we could see pictures of the corn hat floating out there on Twitter and everything else.
Yes.
So.
And I've got an eye on a travel corn hat, something that's a little flatter and yeah. So I'm in the process of fixing this problem, Jesse. So next time.
I love it. Well, I appreciate some time here at Commodity Classics, sir. I know we'll talk to you again real soon. Thanks.
Yeah, thanks for having me on, Jesse. Always a pleasure.
Ted Seifried, Zaner Ag Hedge. That's going to do it for Market Talk on this Friday, March 11th from Commodity Classic in New Orleans. Find us, markettalkag.com. I'm Jesse Allen. Have a great weekend.